Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Wednesday edition of Benzinga's Pre-Market Prep. Spencer Israel, Jor-El, and Dennis Dick. A pair of guests today. First up at 8:35, we'll be joined by Nate Tobik. He's author of the Bank Investor's Handbook. He also runs CompleteBankData.com. And then at 9, we'll be joined by Tasha Keaney. She's an analyst at ARK Invest. She will give us her thoughts on Tesla heading into earnings today. That'll be the theme of the show pretty much. Is earnings. You got Tesla after the close, Microsoft after the close, Chipotle after the close, Snap after the close yesterday. So we'll talk about those numbers. UAL yesterday. We've got some more tensions with China. Surprise, surprise. Pfizer just signed another deal with the U.S. government to sell them vaccines when they have them. And we'll talk about the rotation out of tech yesterday morning and what that means for today. Let's go throw it to Joel here now. Joel, I mentioned the tensions in China seems to have weighed on the market here a little bit overnight. Tell us what's happened. Unmute yourself, though.
Something's going on there in Houston with China and the U.S. and a little weighing on the market a little bit. Not as much. I mean, you have the good vaccine news, so a little bit of an offset there. But the numbers tell you that we've had a 40-point range overnight, and that's good news. We got up near the intraday high from yesterday. So your pre-market high, 65.75. That's 20 handles away. The bulls got some work to do to get up there. Of course, the high of the rebound from yesterday at 73.25. That's a big bogey. On the downside, we made quick work of Tuesday's low at 39.25. Got to 27.25. Rebound, I don't know why. I didn't have a level there. So we're down 450. Good volatility. So this should be a good trading day action on both sides of the market. We have crude giving back some of those gains from yesterday. Thought we were out of a trading range. Down 73 cents at 41.19. Gold is ripping here, folks. Once commodities start to trend, they trend. Gold up 17.90 at 18.61.40. But gold's a laggard, man. Silver up $1. This is called the $1.70 at 23.28. Busting out here. Commodities, once they get going, they get going. Bitcoin just kind of hanging out. Down, had a little gain yesterday, down $15. But I'm going to bring Triple D in here, and Triple D and Spencer. I think you guys owe me a little bit of an apology.
Uh-oh. What do we do now?
I didn't do anything.
Probably primarily you, Dennis. More than Spencer.
I made fun of your age too much?
Exactly. Old lives matter. Too.
No, we've been worried so much about, everybody else, and we should be worried about Joel because Joel's older with this COVID,
Exactly.
No, seriously, why? What's wrong?
I made my tongue-in-cheek comment about the post office yesterday.
Yes.
And you went off on it, and you said, Joel's old.
You found evidence the post office going out of business?
I have not found evidence, but my people on YouTube have helped me out. And one of the reasons UPS bleeds money is because they're forced by legislation to aggressively fund pensioners' medical. So they are a big drain. Not necessarily that they're going out of business, but what if they were privatized? I mean, there's a lot of things we could do to make our post office more efficient. And you said I was old, and Spencer laughed at me. So if you guys just apologize, and we can just move on with the show.
I think it was a little the extreme comment of that we don't need the post office anymore. I think that was more. Now you've changed your tune to a certain extent with this privatization comment, and that's a different story. But I think we still need the post office.
That's a whole other can of worms.
So yeah, so me and Spencer, I think, are going to reserve our apology here because it was a ridiculous comment that we don't need the post office. One day, do we need the post office less than we used to? Sure. but we still need the post office. So I'm going to reserve.
And what about you?
But your point is noted.
Okay. Okay.
Where would I be if I couldn't make fun of you, Joel?
All right. So what do we want? What we want to talk about tensions, U.S.-China tensions? Is that something new?
No, I want to talk about silver because
it's not just silver; it's all the metals.
I don't even care about U.S. or China tensions. COVID's on the back burner. It's all about silver, folks. What is going on? This silver had a huge move yesterday. And full disclosure, I'm still long silver in the long term.
Same here.
And I have some trades on. I'm long some silver miners and doing some funky things here. So all kind of paired up. So all kinds of different, silver trades on here overnight as well. But holy mackerel, blasted out of a cannon. What's going on? It's up 8.5% after tacking on. What was it up? It was up like 5-6% yesterday. So talking up like 14% now in 24 hours. Did we just decide that silver, the luster is back? We're all going to start wearing silver jewelry, getting silver fillings. What's going on? Why? What's the catalyst? Why?
Well,
do we know why? Do we have a catalyst for why silver is just blasted off? And obviously Fast Money last night, there was a guest on there that said, oh, silver looks good. This isn't from the guest on Fast Money. This is an incredible move here in the futures. Why is it so hot all of a sudden? I mean, it's been hot. This feels like upside capitulation now happening, though. Like the blow off top. What's up?
Didn't someone in our chat like a week or two ago say something about like there being a copper shortage? That won't affect silver, but metals.
What's a copper? What's the ETF on copper again? You just gave it to me.
Yeah, COPR is one of them. There's a few.
What's the other one? The other one he gave me was better.
Well, so there's CPER, and
CPER,
and then JJC. Those are the two like pure.
I mean, that's moved, but it hasn't exploded like silver. Just all of a sudden exploded. They just shot it out of a cannon. And they just shot out of a cannon right before the show started too, because it was trading around 2080, the SLV, and then just blast up to 2140. So we'll just tack on another 3% just for fun. Is this the new hot retail trade? What's up?
What's up? Could it be a weak dollar?
But what? Okay, so you're gonna move in gold too, but let's compare the moves. I mean, okay, so in the last month, gold's up roughly 7%, call it 6%. In the last month, silver, on the last 2 days, it's up 14%. But in the last month, same time frame, 21 over 16, like it's up 30%. So obviously silver's always been a little more volatile than gold, but holy mackerel, these precious metals are precious once again.
Maybe it's something to do with Judy Shelton. She got confirmed by the House yesterday. She's going to be on. It looks like she's on pace to be on the board of the Federal Reserve, and she's a gold standard person.
I was just thinking that at the back of my head.
Go back to the gold. Good luck with that. You need a lot of gold and silver to get back onto this gold standard if you want to go onto a silver standard.
She got confirmed by the banking committee, so now it goes to a full Senate vote. But she's going to end up being on the Fed at this rate. And
I mean, Spencer, logically, when we have low interest rates or negative rates potential, you would have thought that precious metals, would have been rallying for a long time with, rates continuing to decline. It took a crisis here, and obviously we look at silver and look at what it did in March. I mean, it went from $17 down to $10, the 10 handle, and now it's exploded. So you can fundamentally say that if rates are going to be low forever, which it appears they are, and in Europe we have negative rates, if we're going to eventually have negative rates, not necessarily here, but in more places, precious metals is definitely a store of value, and you don't have to pay, besides storage costs, obviously, which are minimal in the silver and the GLD comparative to the price. It's a safety play maybe, but the market isn't going down. Usually you see gold and silver exploding when there's, risk off, where people are like hiding into safety. This is like speculative action here happening in silver, which we haven't seen in a long time.
You know, Des,
So,
you always
big
talk
move.
about, like on the show, like if something's moving and you're like, everyone has to find an excuse, right?
Yeah.
Like why? I mean, if stocks can go from 5 to 150 and with no earning, I mean, so this is really not that out of the ordinary. I mean, what I think you're seeing here, let me pull up the silver chart, is just good old fashioned momentum, right? The big boys are long. The day traders are long. They're just getting it. They're juicing it. There's the momentum. Then on the other hand, I don't know what you could go to the commitment to traders and see if there's a huge commercial short here. But hey, it breaks out. You don't trade silver for 7 years, but you say, hey, if this breaks out at 21, I'm buying the daylights out of it. That's money, and it's money moving it. So it's momentum. And one thing about commodities, once they get going in one direction, it's hard to stop it. And they got going in
It's a
one
freight
direction.
train right now.
Yeah. Yeah.
I mean, like I said, I have silver in a long-term portfolio. I feel like dumping it. I feel like dumping into this because it's such a big move. And I don't know. I guess the momentum's going, but usually I always look for the upside capitulation when trending up, trending up, trending up, and then you get this upside capitulation move where everybody has to come in 14% in the last couple days. It feels like upside capitulation, but you could have said that yesterday. Now you get another big move tacked on. So maybe you wait till you get that first ugly red candle and then try to, get out when, after the circus is left down. We're using the Harlan Pine analogy there, but I don't know. Like you own silver too. I mean, it's been very disappointing investment for a long time. I've owned very little precious metals. I've had silver. Like I said, I bought it back, I think, a long time ago. I feel like back in 2014, maybe 2015. Now 2014 probably, because I was getting in around 18, 19 bucks. You can see the support I was trying to lean on, probably 17.75 back in June of 2013. It was all kinds. It was holding around 17, 18 bucks. And I was like, it's going to hold to turn around. And it wasn't the case. Obviously, it went down. And, I just wanted some precious metals in my long-term portfolio, which I'm still very underweight. So maybe I should just hold on and ride it out. But wow, what a move.
Yeah.
Hard not to ring the register.
I can't believe I'm saying this, but should I reach out to Peter Schiff's people? Try to get him on the show because we know
Schiff is hot now. All of a sudden,
he's been pounding the table.
We've had Schiff. We've had Peter Schiff on the show a few times.
I know. But last time
he was a little upset with that last segment when he when he thought that was before we had video, so that was a while ago. So, anyways, he thought it was TV and it was video, and it was like he wasn't impressed. But anyways,
who else is our commodity?
You know what? We have a good relationship with Peter Schiff. He came out in New York. He's always been very professional with us. He got a little angry with us on that last one, but I think we get Peter. Want Peter Schiff back? Let's chat. 1, to get Peter Schiff back on. 2, to not get Peter Schiff back on.
The only reason I say
we can get him. We've had him 3-4 times. We can get him.
I just say it like that because every time it's just he's on that gold train but now it's actually worth talking about. So maybe.
Hey Spencer, I'll put you in charge.
A lot of ones coming.
Yeah.
All right. No, there's a few too. Oh, stock hands. All stock hands saying 2.
He's a you can't do that. You can only answer once. Spencer, I'll let you handle it. Okay. You're in charge of reaching out.
Joel's scared of the Peter Schiff interview.
No, it's just a lot of emails. And
I will tell you one thing.
Like
nobody can talk better than Peter Schiff. I've always thought, when he gets on CNBC and he goes head to head with somebody else, I always feel sorry for the other guy arguing because Peter Schiff can argue. That person can talk, man, and he will argue his point and he will make his point perfectly well heard. He can argue. You never want to be on the other side of Peter Schiff.
Well, he's been making it for 20 years, so I imagine he's pretty.
It all makes sense. I've read his books. I'm a Peter Schiff fan. I mean, I've read some of Peter Schiff's stuff. I bought his book, The Crash Proof, and it all makes perfect sense, except it just never came to fruition. So maybe this is the time. Maybe this is actually the time because he's been calling gold to go to 5,000 for a decade. It's gone nowhere. But you know what? It's starting to shine. So, hey, maybe Peter Schiff, this is his time. So, get him on. Let's get him on.
This is officially more metals than we've talked on the last year.
We never talk metals. It's too boring. But they're exciting all of a sudden. They're shiny and stuff.
Yeah, maybe we should move on here and go to the stocks. Let's start with earnings from yesterday. I just want to cover Snapchat real fast. because part of this was surprising and part of it wasn't. So in terms of numbers for Snap, EPS, they lost 9 cents per share. That beat the estimate by a penny. Sales 454 million versus 433 million, so they beat that number as well. Daily active users up 17% on a year-over-year basis. So that all sounds good, but it wasn't actually that great, and you can see it in the stock there. They said on the call that they got a bump initially from everyone being at home and being in quarantine, and that bump receded faster than they thought it would in terms of daily active users, in terms of activity.
Can I give what Dennis's reply is going to be?
And also, well, I just one more
You're
thing.
reading my mind, Joel.
Think about this. How do they make money? It's all ads. What happens to advertising in a recession? It goes down. So pressures on Snapchat here. The numbers on the surface look okay, but if you look a little deeper, it wasn't all that great. And you can see it in the stock.
Okay, Dennis is going to say, look at the run this stock had. Look at the run this stock had since March, and even as of late. They were really going to have to blow it away, really blow it away to continue this rally. And the report's okay, but they didn't blow it away. So they really had high expectations.
You learned really well from me, Joel. I am a creature of habit, and I repeat myself. You want to know why I repeat myself and say the same things over and again?
Because you forget that you said it.
Because it works.
Yeah.
Because it works. And that's why I repeat what works. And I'm always pounding the same stuff into the chat's head. It works. The stuff works. I trade all these things. I trade these strategies. I talk about, the different stuff. Stocks run up significantly in the report. You're absolutely right. It's got to blow it away to go higher, and they didn't do it. So, Joel, perfectly said. I might as well just leave. You don't need me anymore. You guys know all my information. You're all in my head. So I'll just go on. I'm going on mute now. There I am. I'm on.
Yeah, that will last about 5 seconds.
Okay, no, it lasted 1 second.
I don't know. Like the initial spike down. They got after hours 21.30, 21.91, and then people are like, "Oh, I missed the bottom." Kind of trade, the people that did the shorter term shorts. So the last dip only took you to 22.50. So for me, I think if you want to get this thing at $22, I don't know. Maybe they'll get it back down there today, but just the way it popped off there, not sure. Finding resistance here at 23.25. Let me look at yesterday's range for you. Long way to go. Got anywhere near 24.5. That's a pair of lows from Monday and Tuesday. That would be palms out on that one. And then let's see if we can find some daily support in here. I mean, I didn't want to start figuring any retracements here, but I see 22.68 low. You still haven't had a chance. I see a 22 low. I don't know. 22 today, I think would be a gift for the shorts. I think 22 over the next couple days is possible.
Stock's still hot, so it's still in an uptrend. So you're still going to have the people who want to buy the dip on anything that's in an overall uptrend. I've never got the story. I don't get it.
Neither do I.
They don't make money. I think it's, something that, people are used a lot more. You heard a lot more about their, hot dog and all the other things years ago. I don't hear that much about Snapchat anymore. So I don't totally get it. Why it's so hot now, but maybe
it disappears, right, Spencer? Is this the one that you send it and it disappears?
Yeah.
Yeah. Facebook essentially copied that feature, but yes, that's
weird. I don't know. Why would you send something if you wanted it to disappear? Unless it was naughty or something.
It's hard to explain. It's like it's something that you communicate. If you want to communicate something that's like so minor in your life and like, hey, here's a quick thing. I was thinking of you. Boom, and then just move on. I don't know. It's just another way to communicate.
Okay. All right. Obviously, Dennis and I don't participate on it. Or really know much about it, but hey, had a nice run down 22. That's my level. What else do we have after the close?
Less eventful from a trading standpoint, but more interesting from just an overall market standpoint is United Airlines. They reported last night. As you can imagine, the numbers were pretty darn bad. EPS on an adjusted basis, they lost $9.31 per share last quarter.
$9.
$9. They were estimated to lose $9.02. Sales $1.48 versus $1.32 billion. So They came in above the low bar in terms of just revenue. What else did they say?
Impressive.
They said that
Most impressive.
their daily cash burn for the quarter averaged $40 million a day. And they expect their cash burn for this quarter to be $25 million per day.
That's good news, Joel.
They see capacity falling 65% year over year during this quarter. They do have enough cash, they said, to get through this. But
when is it going to end? When's through this? Is that next week, next month?
Until a vaccine is available, however long that takes.
Oh, Jesus, Murphy. Dennis, I'll let you take this one.
It's not investable for me. I know, people can say it's going to come back. They've went bankrupt before. And if there's ever a time it's going to go bankrupt again, it's going to be through this whole, crisis. So, however, if we get a vaccine tomorrow, and, obviously we get positive vaccine news every day, Pfizer today. So, maybe, but, as a trade, if this thing ever takes out the 29, 23 low of the move,
I see that, yeah.
You do not want to be long this. So I would say if you are long this and you're saying eventually it's coming back, have yourself a stop out under 29, 23. You're risking yourself 10%, but I'm not playing this one. Not from the long side.
Yeah, and I'm looking at it, converse, if you want to own it. I mean, this 30 looks like it's been, it's bounced above 30, below 30. You mentioned that 29, 23 low. Not much pre-market action. I mean, it's just a pure speculative play if you're buying this. And I think, and we also mentioned this several times. Yeah, well, the passenger, vacation travel is going to come back, right? At some point. But what about the business travel? When you travel on business, you got to spend money to get to the airport. You got to spend money to park at the airport. You got to spend money to fly. The food and drinks are very expensive at the airport. Then you got to take a cab. Then you got to go to a hotel. And then it's more, you're just talking companies, maybe why these companies having good earnings. They're slashing their transportation budget by 85%. So, never owned any airlines, never going to.
It's tough.
Yep.
It's tough. I will go in if we get a vaccine.
Yep.
Or we get, that we're looking like, hey, we're going to beat this COVID thing. These things are all buys, but we're a long ways away from there, I think. So I think if you're buying here now, yeah, there's support, and maybe, this market is just strong enough that, these companies can keep burning cash like they are, and they're going to find more buyers because they can raise more cash. But dilution is probably still to come for United Airlines. All the airlines are just really tough trades for really tough from investments as well right now, even though they look cheap from a fundamental basis if you're looking at last year's earnings, but you can't look at last year's earnings.
All right, just look behind me here, and I see Bill Ackman on CNBC pumping up his IPO today of his special.
When does it come out?
Company today. I don't know the time.
It's going to be listed today.
We don't even know the ticker. I'm pretty sure the ticker is going to be PSTH, but we don't have a confirmed ticker yet. But again, this is just a blank check. So, Dennis, you were saying on the pre-market show that it'll probably run today, but only because it's Bill Ackman. But
so it's going to open for trading today, because I don't know this. I've not been following the story. I know Ackman's coming out with this back, but I haven't been following timelines on this.
Yeah, so, he's on CNBC right now talking about it. So I'm imagining it's going to open today. And
either way, when Bill Ackman's back comes out there, it's going to be hot. It's Bill Ackman. It doesn't matter that he hasn't bought anything yet. It's Bill Ackman. He's hot. Bill Ackman is, it's set right now from hedge fund managers. When I'm looking, the 13Fs coming out, when they come out on the Friday night, I look for two: Warren Buffett, Bill Ackman. Those are your two movers. So he's a step down right now. He's been hot as hell. He's a step down from Warren Buffett. So, from influential perspective.
What about
it's gonna go? But are you gonna be able to get in on? Where is it gonna? It's $10.
$10. It's $10. That's what they're worth.
Yeah, that's what the cash is worth. But it's got Bill Ackman behind it. So the Bill Ackman story is they think he's gonna probably invest in something pretty cool.
Can we do a SPAC?
Sure, we just have
the Benzinga SPAC.
We just have to decide within a year or two what to buy. I don't know if
you need a little bit of money, right?
We're gonna buy PreMarket Prep.
Okay.
You guys understand these. You guys are investing in these. Dennis, you're in this LCA.
I'm in a few of them.
You're in a
I'm
few
not
of them.
only an LCA. I'm an LCA. I bought the SHLL yesterday. Leaning SHLL is short term though, not in the long. LCA is stuck in the long term. Shell. We'll call it Shell. Tortoise Acquisition or whatever the hell it's going to be.
SHLL.
I just like the setup. I was like, I got an out at 21, so I bought it, and I'm leaning at 21. If it trades below 21, I'm going to sell it. LCA, I believe in that story because we know what LCA is going to be. It's going to be golden nugget. It's going to be online gaming. It's going to, have a participation in sports betting part of it. I mean, I think it's DraftKings part 2. I like LCA. It went up again a little bit for a while yesterday. It's highly speculative, so don't put any money in anything. Don't put the money you can't afford to lose, but I think it's a good one. I'm a fan.
Okay. I'm not going to argue with you. I mean, it just, they're going to, they're going to take over the company and they're going to change the symbol, and the company that taking over or being a part of has to be profitable, right?
LCA really isn't even a SPAC anymore, really. It came as a SPAC, but it's going to be golden nugget. So we know what it's going to be. Ackman SPAC is we don't know what he's going to buy with it. So, it's the wild card of
the mystery
what's
box.
He
It
do
could be
anything.
anything.
But he's a pretty smart guy. So, that's why I think it'll be hot, just because they're like, hey, when you're buying a SPAC, you're buying the management team is really what you're buying. Because that's, especially
have you ever been in the Golden Nugget in Vegas?
I've been to the.
Is that in Old Vegas?
I've been to the Golden Nugget in Atlantic.
That's like in what's it called? Old Vegas. I'm getting old. I'm starting to lose the names of stuff. Fremont. Fremont. Is that where Golden Nugget is?
No, I think.
I'm pretty sure.
It is.
I've been to
it's about over on Fremont.
You need to take a shower once you leave that place.
Come on.
Yeah.
Well, that's every casino.
I've been to the one in AC, and
they don't let you smoke as much as they used to in all of them, though. It used to be the smoke that got you. So you go down these, and it's like, cut the cloud of smoke to get to the slot machine. So, do they still let you smoke?
Yes, they do. Well, I mean,
on Fremont, inside the casinos?
Casinos in general, yeah.
No, I didn't know if they let you do, because you don't smell smoke in the main ones. Like, they don't let you smoke in MGM, do they? Do they still let you smoke in MGM?
Sure
in the big ones? Inside?
You know what? I think they have smoking sections. That's what
I don't think it used to be everywhere.
Right.
But I don't think it's that way anymore.
Yeah.
I haven't been in Vegas in like 5-6 years, so it's probably all changed. The one thing I didn't like last time I was in Vegas was going to the casinos is they're like putting that scented perfume into the air all the time. So you go in there, it's like you're breathing oxygen, but it's like scented oxygen. I like the smell of it. Anyways, this is a bad tangent. So bring us back. Come
on, Spencer.
We got Tesla earnings tonight, or we got Microsoft earnings tonight. We got it's Chipotle, Las Vegas Sands. Let's talk Tesla.
You want to talk Tesla now?
We're going to talk Tesla twice. We're going to talk it. We have a guest coming on at 9:00 who's going to talk Tesla, but I want to talk Tesla too. Let's talk some Tesla.
Okay.
What do you want to say?
TSLA, bring her up. Crazy stock consolidation station was in 2 days ago when Spencer Israel made the call. We pulled back yesterday. So we get the little pop here, a little pre-earnings run. What's going to happen tonight, though, when the fireworks go off and it has earnings? Is it going to move the $250 speculators are saying on the straddle? I think less. I don't think it's moving $250. I'm almost tempted to come in and get my straddle riding shoes on and do it again. What do you think, Joel? You think it's moving $250 off earnings? I don't think so. I think the straddle's a good right. That's just my opinion. If it's 250 still, and we checked it yesterday, I believe it was 250. And if anybody can verify that, I think the straddle's a good rate at $250.
Well, it's only, it's 125 up, 125 down. So,
but you're right for 250. You're good. If you rate both, you're good down to 12. What's the air math on that? 213. You're down 1310. 13, if you're looking at it, I guess I'm looking at it from the closing basis. So 1310, and then you're good all the way up. You're making your scratch at 1310, and then if you're 250 up, you're scratching almost $1,900.
Okay.
1910. 1310 to 1910. That sounds pretty good.
Spencer, give me the I don't know. I mean, this thing could
225. Jeff is saying, so it has come in a little bit.
Yeah, it has come in a little bit.
We're not quite good to those levels.
What if they if they totally fall flat on their face, which Spencer, what was that news that was out yesterday? I mean, I know we had to downgrade that, didn't move it. I know there was some tech selling. Was it Gordon sent us a note, and it just wasn't Gordon. There something about doing something to make numbers. Could you repeat that?
Gordon sent us in. So they did catch a downgrade for whatever that's worth, probably nothing yesterday from JMP Securities, but that was talked about in the morning. And then in the afternoon, Gordon Johnson, who's been bearish, has been on our show, came out with his report that said that they had heavily discounted fleet sales in order to make their number. The only real question here for Tesla is did they make money last quarter? That's it. Because if they did make money, then that means they're probably in the S&P 500.
That's the big thing.
If they didn't make money, then they're not in. It really is that. I think that's simple.
Everybody's really interested on whether this is going to go into the S&P 500 or not. I mean, and I had a question. What is the relevance really? You're getting into the S&P 500. This was a question from somebody, on my Twitter account was asking me about this. I mean, because all the indexers got to buy it then. So that's, really the main reason. But I'll tell you, sometimes, it's in the other indexes. And when it comes out of one, it goes into the other. Sometimes the index effects, believe it or not, can be negative. So you've got to look and, and analyze it from the index perspective. But I have seen stocks get added to the S&P 500 and go down. Yep. Yes. It all depends on what the overall, buy sell, ratio is, because when you're getting added to this, you're coming out of another index. So if it was more, shares in the S&P 500 is why they own, but people think that just because you go in the S&P 500, you're automatically going to go up another 5-10%. It's not the case. Yeah, it used to always be that way. It's not the case. Sometimes I used to, there used to be an algo that would trade off that, and the S&P 5, ads come in. They come in randomly, and from S&P, and sometimes they're ads, sometimes they're deletes. It used to be a slam dunk out of the S&P 500. It's going up 5%. That algo has stopped running. You know why that algo stopped running? Because they don't always go up anymore on it. So just because it's getting added to the S&P 500 doesn't necessarily mean that it's going to fly up 20% the next day. I wouldn't be surprised with this much rumors on it, that a lot of it potentially is already baked in. So it's hard to say the effect here. But the earnings matter. Like you said, Spencer, they need to show a profit to try to, to meet the requirements to be added to the S&P 500. Are they going to show that profit? I think so. I think they'll make it happen. I think Tesla will figure out a way to make it happen.
Because everyone says it's more than a car company, right? It's a technology company, right? That's the big. So when they give their earnings, do they break down what they make from the car and the auto sales and what they make from all these other technologies and things? Do they disclose that?
Well, the car is the moneymaker, right?
But I thought it's a tech company. I thought it's a computer on wheels. I thought that is why people. I get confused because I hear it's a car company and all these great car sales, and I'm here. Oh no, you don't want to own it. You want to own it.
It's just people trying to justify the valuation too.
Yeah, I would like to see what their tech sales are. I personally I wouldn't write that straddle, Dennis, because if there's a stock that. Full disclosure, and I own it and not selling it, but I look at this chart. Why not go to 1,200? Why not take this thing down to
or the other way? Maybe they actually come out and make more money, and the thing goes to 2,500.
Yeah,
I mean, it could happen.
I'll tell you, Dennis, what you're better off than doing that straddle is if this rips I would rather let you have it rip in the or after hours when it happened, maybe rip up like the 1,200 or what's the old time high. Just get like a huge boost and then lay into it as opposed to going into the straddle. That's what I think. I
kind of like the idea because I don't think it's going that much, but it's a high risk play. There's nothing riskier than writing straddles, especially when you leave them open ended because the thing could go anywhere. So you do have to keep that in consideration, obviously, if you're writing the straddle and what we mean is by writing the straddle, writing the call and the put at the same strike and, for the week. So
for the week, that's the most important thing here.
Well, through the earnings, you're taking it through the earnings. We're doing the weekly, writing the call and writing the put. And that's where we get the expected move. You just add up the premiums and that's the expected move. It's 225 points. If you say it's not, you think it's not going to go 225 points, the straddle rate isn't a good play. But if it takes off 500 points, you lose a ton of money. So, and you're taking in that premium, and then you're obviously right open after that. So for losses. So it's
Tough.
it's a risky strategy. Like I said, I've had mixed success on it. I had some success for a while, and I got just burned on an Apple rate once, and I've been kind of hands off on straddle rating ever since. Just burned on it. So you get burned on something, you lay off it. But I don't think it's going 250 points. So I think the straddle raters are going to make money.
Okay.
Just my opinion.
All right, I'm going to bring on our guest now, Nate Tobik. He is a fundamental investor. He's the founder of CompleteBankData.com, also the author of the Bank Investor's Handbook. Nate, good morning. Oh, let me make sure you're on mute here. I think your microphone's muted. Let's get that undone. I see you, but I don't hear you. There we go. Good morning.
Good morning. How are you guys doing?
Good. Nate, you're a fundamental guy. You look at Tesla. What do you see?
I have, Dennis talks about being burned. I've been burned, short, on and off. Sometimes I'd flip to being long and ride the wave. I did not ride the wave enough. So, I think I have a few small puts out there just for the black swan, right? And otherwise it's, like you said, I think they will do whatever they have to do to show a profit. And if that is, selling cars to friends and family and themselves and, whatever, I think
they're going to show the profit too.
They'll do it. And that's what matters to them. And, ultimately, I think it's probably a house of cards that at some point will finally tip over as these things get bigger. But, it hasn't happened yet. And we'll just see.
So
Right,
Nate, let's take it back to where you are. Let's talk banks. And obviously, you follow the sector closely there. What are you looking at here? I mean, if we just look over, and obviously, you talk regionals, you talk smaller banks sometimes, but I mean, look at, what are you thinking, first of all, banking sector overall?
Right. So it's, I think there's going to be a big divergence between the winners and the losers. And, so long term, there is a really negative outlook in terms of the rate pressure. And, if you think of where mortgage rates are now below 3, most banks are really going to struggle to make any money on a mortgage like that. Likewise, commercial rates are around 4, sometimes 4.25. And a bank could do okay on that. The problem is, where's that commercial loan demand going to come from? Right now, a lot of, so you have bigger companies, which a lot of bigger companies are doing well. Banks that service those bigger companies and are doing larger loans in size are going to be okay, right? And when you start to get to banks that are dealing with smaller companies that have really been hit hard by COVID, there's just not loan demand there. So, long term, I think the outlook is pretty negative on these banks. Short term, though, there are a lot of things that are causing these things to pop. So you do have the mortgage refinance boom, which is going on right now, and a bank could make a few percentage points on that. And so for example, U.S. Bancorp, they were hit pretty hard with provisions. Fee income was up a lot, and the stock is still at it's like 1.2 times book versus look at like a Regions Financial. They had a lot of provisions, reported a loss, and they're trading at like 65% of book. So half the valuation, and both regional, sort of similar sized banks, and just kind of how one's taking it versus the other. So it's overall it's a negative outlook. But we do have the mortgage refinance boom and the payroll protection loans, which that is going to juice a lot of banks' revenue significantly in a quarter. So you have those positives, and then kind of the underlying things are deteriorating, And we really haven't seen the effects of COVID on these loan books. And so, let me just walk through like a real quick example. So if you, let's just say, you had a job and everything was going great up until March, and then you decided, or you were laid off and the company folded, we'll say, but the bank was able to, they said, well, since you're on lockdown, we'll just extend your mortgage and grant forbearance, and it's not going to be a big deal. So that's finally coming due, right? So that mortgage, they said, we're just going to, ignore it, right? We'll let the chips fall and we'll settle that up come July. So you haven't paid on it now, and the note is currently, it's current, right? And then so it's going to take 3 more months before they're going to recognize that as a non-performing note, and so we're looking at now, say October, and that's going to be a hit in Q4 earnings, which is really going to be reflected in the earnings release sometime next year, sometimes in the first quarter next year. So there's a huge lag between what happened earlier this year and when that might appear on a bank's balance sheet. Now, the upside to that is banks they know what's going on and they've had enough time. It's possible they're going to get out in front of it, and they've been over reserving, and they might be able to have the reserves to really run through this in a lot of cases. So banks that are solid earners, that have a lot of earning power and a diverse product mix, I think are going to be perfectly fine, and they're going to be able to reserve their way through it. Banks that really were kind of running close to the edge, I think are going to have a significant problem over the next 6 months to a year.
We're on the line with Nate Tobik. He's an investor and founder of CompleteBankData.com. He also wrote a book, the author of the Bank Investor's Handbook. Nate, I mean, to me, the potential, bankruptcies. I mean, people are not paying their mortgages. I think about the New York City real estate market. Okay, I have nieces that are that live there, and they're paying this rent. They're not living there. They're living outside the city. I mean, you're just talking about billions and billions of dollars in rent that's not going to be recovered. And then I drive around, my local area, and I see all these retail stores closed, and a lot of these mom and pops are just on shoestrings. I mean, is there any way to measure that? This is, to me, it's almost an insurmountable debt that's out there that is just not going to get repaid. How can the banks possibly have enough reserves to cover, the REIT, the apartment market, the housing market, the retail market? To me, it just seems insurmountable.
I agree. I mean, I anecdotally, I see the exact same thing. And, talking to people who are even doing real estate development, they say, we have some projects finishing up this year and there's really nothing coming up next year. And there isn't the demand. And it's the dominoes. So you say, I saw an article yesterday that said it was something like 16% of New Yorkers are planning on moving. I mean, that's a huge amount, right? And so you say, what's that going to do to property values? And that knocks down property values. And that's like that anywhere. And I think, so in looking at banks, kind of the base case scenario that analysts look at is that we will not get this domino effect. And so when I've kind of built out a couple scenarios I go by, when I do look at the domino effect, yes, there's going to be a lot of bankruptcies, and you had the XLF up there. That's probably not a bad short to just ride that one down. There's a ton of headwinds, and it's going to be, so the headwinds are, there's no loan demand, and you have a lot of banks that are struggling with bad loans, and they're going to try and sell these properties into a market where no one really wants to buy them. So what I think is, what's really interesting is what we're seeing in some of these cities, like in Minneapolis or Portland, those marquee properties in the center of town really aren't marquee anymore, and they're going to take a big hit on value. Whereas, so outside of town and in more rural areas, what I've been hearing is demand is off the charts. And I actually heard that from someone very recently on rural demand. They said people trying to build on empty lots out in, I don't know the exurbs or kind of the area, but you're not quite in the country, but you're not really in a suburb. It said it's just going crazy. And, so a lot of people have been stuck at home, and they said, this is not the home I want to be stuck in for the next 10 years. they want something else. And so there's a lot of demand, but it is not in the city centers, and banks that went heavy into the city center lending are really going to be having a problem. They're the same with banks that have a lot of hospitality loans and hospitality REITs. I think some of those are terminal shorts. But
do you have a couple names that you're looking at that are really overexposed here from the short side?
I've been riding Hersha Hospitality Trust, HT. I've been riding those guys down.
Which ones?
HT.
So they own high-end hotels in a bunch of cities. It's like DC, New York, Seattle, and they're very reliant on business travel. The thing that's interesting with them is they operate their own hotels. They were losing money before COVID. And so if you're losing money before COVID, this is not going to help you, especially if you can't offload those operating costs onto someone else. And I think that they are going to have a lot of problems. And the expectations baked into them right now at what are they at, $5.50, $6 a share? I think it's unrealistic. When it hit $2 or $3 a share, that was probably more accurate. And so that we'll see what happens with them. Yeah, Marriott as well. I was just talking to someone who was looking at needed to make an out-of-town trip. Said, "What about a Marriott?" They said, "It'll never happen. We wouldn't even call them to stay there. You're looking for something else." So,
why wouldn't they go to a Marriott?
They just scared
of the virus.
Scared of the virus.
Oh,
and
okay.
They had the they owned a bunch of the timeshares and everything. I said, "Well, what about staying at your timeshare?" They said, "No, we're just gonna let it ride. We'll pay the fee. We're not staying in the timeshare." So, if you think about brand loyalty, they probably have the most brand loyalty of anyone. They have the credit cards, they have the timeshares, and when it comes to an out-of-town trip, we're not going to be staying there.
Nate, real fast, what about any REITs that maybe have exposure to like universities and colleges? Any on your radar for that?
I don't have specific names. That's a good point. And so there's a lot of, I think what's interesting is like there's a lot of small town banks that people try and play the college town angle on.
Yeah.
The reality is most college students are banking where their parents banked, or they're banking at a larger regional bank that has branches in the college town. They're not banking at First Bank and Trust of College City. Yeah. So I don't think that's now what will happen to those small banks, though, is they're going to get the domino effect from the landlords, because as college students aren't going back, no one is renting out those buildings, those houses, and then they're just going to end up having to default on the debt.
What do you think about this American campus communities here? I mean, I'm just, that was a little bit of a retracement there. I mean, I just think
What's that one got in it?
What'd you say?
Do we know what that has in it? That REIT?
It has college campuses.
Is it all college campuses?
Yeah. I mean, how could you be thrilled about that? I mean, for years, my dad and I talked, wouldn't it be the greatest investment to like buy a cheap house in Ann Arbor, and just sit on it for years and years and years? And you know what? It was a good investment for years and years and years and years and years. And now, you know what? I'm glad I don't own a slew of houses in Ann Arbor, especially since the landlords never did anything to take care of them. And plus, there's more supply coming on. They're building all these apartment buildings, And you're going to, I mean, maybe in a year or two, things will return to regular occupancy. But I mean, there's some of in Ann Arbor, they're trying to sell apartments like it's Chicago or New York City. And they were getting out of state students to pay this. That going to happen now? No,
No.
no
No,
way.
no, nope.
No
Those are,
way.
and you can't survive. A landlord can't survive 2 years without
No.
rent. There's no way. That's there. Yeah.
Well, maybe some of these Ann Arbor landlords can because they've had them for like ever and they've never put any money into it and they spend a lot of money. But
I mean, the bottom line on all this, though, is when is the vaccine coming? Because if we, get the vaccine and it works and everybody's confident to go back to the way they were living before a year from now, then a lot of these, things could be buys. But it's how long, that it takes to get to the comfort level for people to go back to the way they were living prior to March. I mean, that's the big question. I don't know if anybody knows the answer to that. So that's why you've got people that are buying these things thinking, hey, eventually we're going to go back to normal and this is going to be cheap. And you have people, and I'm kind of on the same side as Nate here saying this could take a while. And, some of these, banks and some of these REITs could be in a lot of trouble if this takes more than a year or two.
Yeah. Yeah. And in some ways, if that is your view, some of these prices are almost a gift because if you look out and say, American campus communities, even right now, a lot of colleges, they're still kind of back and forth between we're going to be open, we're not going to be open. But once they say they're not going to be open, parents aren't going to be paying rent for this year. And, now they have they've got the mortgage that is still due. The mortgage doesn't go away. And, so their choice is to somehow raise more money and try and stretch this out another year because they have to wait until next August. It isn't like people are going to come back in February. It's kind of an all or nothing. And so there's a lot of this is kind of a good, I'm going to hunt these down, the campus REITs.
Okay.
That's a good.
Oh, true. All right, we'll get you back.
There we go.
Path. Yeah.
He's the founder of CompleteBankData.com, author of the Bank Investor's Handbook. Nate, as always, thanks for the time.
Yeah, thanks for having me on.
All right, and he got an idea from us. Look at that. All right, just a few moments ago while Nate was on, BLNK blasted off here. PR from the company that they won a grant to deploy 200 charging stations across the Mid-Atlantic region. So BLNK blasted off to, it's approaching $8, maybe mid-sevens right now. But if you're wondering why,
it's a play on electric cars.
How did we not talk about this stock before?
Well, because it's, must have had some reverse splits because look at where it was. Well, maybe not. It was $100 back in 2013. So
higher than that.
These things can, get ripping. They can really go. I'd say if you are buying the rip here, I'd be cautious just around the 850 area, but things carry on stories. Like it's nuts. I mean, and we can talk about some of these moves off Kramer, off of Mad Money, because it's just showing you like there's, algos that are getting driving the stories. There is retail driving the stories. When the story gets hot, it can go a hell of a lot further than you think it should.
We did get to 850 on July 6th, probably on some similar news. We haven't hit that yet. That day it closed at 840. That was a big volume day, and then people changed their mind almost immediately. You had a lower open, sold off to that area. So 850, well, where did we get to on this spike? Only got to 755. So these 850 to keep going. Let's see if it can do that. Nice pop, though. Nice catch, Spencer.
All right, let's do Microsoft here real fast. They do report after close today. I imagine they will. That will impact sentiment on just the rest of big tech and the FANG names or whatever you want to call the big tech group. But this could have an outsized effect here. It's Microsoft. It always does.
It's going to lead, so we're at the crossroads here on tech. And we saw the big sell-off a week ago. Tech went out of favor, had a bad week, was down 5-6%. The overall S&P was up. So you had this rotation from tech to value. We're talking last week. Yesterday, that trade came off. Monday, that trade came off in a hurry because obviously we had a significant spike in tech. But a lot of stocks did not make new highs. QQQ index did not make a new high. 269.79 did not make a new high and then kind of faded after the open yesterday. So you're at the crossroads and you have tech investors saying, okay, is this trade still going? Or do we top out and we're not going to make new highs. I thought Monday morning that we were, because we had such a good day on Monday, and then Tuesday they kind of pulled the rug out from under that. So right now we're at the crossroads. Microsoft, I'm going to say, is more important to the tech sector than Tesla. Tesla is going to be the storied stock. It'll get more of the headlines. But Microsoft, they really want to know how they did in this quarter, because we've been crowding into these stay-at-home plays, and they've deemed Microsoft a stay-at-home play as well, with the gaming, obviously with the cloud, with everything that Microsoft does, even from a computer and PC perspective. They've got a lot of businesses that probably weren't directly impacted from COVID. So they've classified Microsoft as a stay-at-home play. Did it beat the quarter, and is it really, did they really kill it? That's the question. If they did, I think you see the stock pop, and I think you obviously see the Qs follow suit. So Microsoft matters big time, not only to Microsoft shareholders, but to the entire tech market tonight. Watch that report.
On a personal note, I'm getting kind of tired.
I'm still long it too on a personal.
I'm tired of Microsoft.
You're tired of the post office. You're tired of Microsoft. You're not tired of Tesla.
No, it's just
why are you tired of Microsoft? Talk to me.
Well, because it's like, first of all, you do an update on your computer. Okay, it takes a week. I can never do it in the morning. And now it's like, they want me to sign into OneDrive, and they want me to do this, and it's like,
just ignore all that. That's what everyone else does.
I try to ignore it all, and then I can't get on my damn computer. So I don't, I try and have passwords. I try and have things, and it's like, oh no, you need to do this. Oh, you need to reset password. I don't even know what the hell my passwords are, and they want me to reset them. So they're really trying to take over my computer, and not happy
they're spying on you, Joel.
What do you mean?
They all are.
They are your computer.
No, they're worse. They're worse than Facebook. I know Facebook listens to your conversations, but Microsoft, man, I'll tell you. I don't know. 216.38 is the all-time high. This thing's had one heck of a run. I do not own it. If I did own it, I'd get some really nice calls or call spreads or something way out of the money and sell it. Buying puts is always
I'm just
tough.
holding. I don't think I'm going to write calls. I'm just holding through it.
Yeah.
I'm going to hold through the earnings storm here tonight. We'll see what happens. Obviously been in this since
They
March.
always blow it away, don't they? Always. Don't they beat by like 20
But it hasn't
cents?
run up into the report, really. So if this isn't one like, and you can say Snap, it had obviously it's run for the last, little while. So I guess that you could say it's run in the last 3 months, but everything has. But it hasn't run the last 3 days, really. I guess it was a little pop, but that was with the overall NASDAQ. I think if they beat like significantly, I think the stock will actually lift on it.
That's what it's been doing. Fading it is going against the trend.
I think it could lift. I'm holding.
And like Skype is a pain in the butt to use too.
Well,
now.
Skype, they really dropped the ball. They could have been Zoom. Skype could have been Zoom if they would have cleaned it up and did a better job with it. And they dropped the ball. Microsoft knows. And now they've moved on to Teams. And they're trying to figure it out, but they're chasing Zoom. With as many smart people at Microsoft, there was no reason that Microsoft's product couldn't have been a Zoom. And Skype was just, who uses Skype anymore? It's just been a disappointment.
Well, if I could find my password.
I can't find any of the passwords, but, Skype's tough.
All right,
there's so many better, messengers. There's so much better ways to communicate. Zoom, obviously, we love Zoom. We use it every day. Valuation's the only reason I don't own the stock, but Microsoft dropped the ball at Skype.
We're going to talk more Tesla in a minute here with our next guest, Tasha Keaney. Between now and then, though, let's just do one or two more. Chipotle. Speaking of run-ups, they report today massive run-up into earnings. Not sure what you can say about it besides that.
It's just a stock that's loved, so if it does drop on it, they'll probably find buyers again. I have no idea why they give Chipotle the pass. They always give them the pass. I don't think they killed it as much as everybody thinks they're going to kill it this quarter. I think they're going to disappoint. Yes, they have drive-through, but there's got to be maybe the number.
I heard they're hiring 1,000 people, Dennis. I think I saw that. I think they're.
You think they've been killing it?
I don't know. I had their burrito once and I didn't like it.
I don't mind Chipotle. I got turned off after the whole E. coli issue, and obviously we know that. But it's run like you said. It's
expensive
$400
too.
to $1,200. The thing's up 200% or
$9 for a burrito or $11 for a burrito.
The thing's up 200% in 3 months.
I
don't think they killed it. I wouldn't want to own Chipotle in the quarter. It's still a coin flip. I don't know what are they expected to make? Is it supposed to blow it away or what?
Let me tell you real
I
fast.
don't know. We've been wrong on Chipotle for a long time.
We
so
have.
I'm not
Me and
so.
Joel, don't listen to us on Chipotle.
Yeah.
We've been wrong.
Bye. Go long. Go
The
long into the
estimate-
report.
The estimate is they'll earn 19 cents per share on revenue of 1.3 billion.
I'm very, 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 very torn on this one. So we'll just say that I'm not going to play it into it, but I think just if I'm looking at it, I think they could miss.
All right, there we
My
go.
thoughts.
All right, I want to bring on our next guest now, as I just teased it. Tasha Keaney. She's an analyst in ARK Invest. She covers the whole autonomous technology, robotics, whatever you want to call it, space. Let me get her video up here and see if we can hear her and see her, as Zoom is being mildly buggy right now. So bear with me, folks, as I work to try to bring Tasha on right now. As I mentioned at the top of the show, she covers Tesla and they report. So we want to get some more of a fundamental view on the company just ahead of the report here today. Let's see. There we go. Let's see if I can get her on. There's her mic. Tasha, can you hear me? Good morning.
Hi, good morning. Good.
Not sure if you can see me or if I can see you, but at least I hear you, and that's good enough. There we go. Thanks for joining us today, Tasha. Is the only question whether or not Tesla made money last quarter? Is that it?
Yeah, I think other than, so I'm seeing estimates of a loss of about 10 cents, a revenue of like 5.2 billion roughly. I think there'll be an eye on auto gross margin. I saw an expectation for like 24%. I think other than the bottom line, we are certainly wondering if we'll get an update on Texas, their plans there for production. My latest work on Tesla has to do with ride hailing. Tesla said that they could launch a ride hailing network ahead of solving for full autonomy. So this would be basically like an Uber competitor. And I think they could do it really cost effectively. And I also think the time to launch is now. I mean, like Uber and Lyft, those drivers are basically looking for extra income right now. Again, Tesla could vertically integrate through finance and insurance and actually do this cheaper. I think they have a lot of competitive advantages to do it. So any update on that network would be awesome.
I guess, how bullish or bearish are your expectations just short term for today's announcement and in the short term here in the immediate future?
Yeah, we're really long-term investors. So we tend to sort of take these short-term announcements to sort of try to see if that changes our long-term picture or not, which is why we sort of look for those more sort of effective announcements that'll tell us, okay, how is Tesla going to do 5 years from now? How many cars could they actually produce in Texas? That's sort of the information that's most key to us.
Now, obviously, you can't ignore the massive run up in the stock. I'm long the ARKW fund, full disclosure, and I know you guys sold a little bit of Tesla just to rebalance a little bit. You can't ignore the massive run that the stock has had. So how do you sort of factor that into your equation? Because at this point, it's a little insane.
Yeah, we took profits in the stock. In some of our funds, basically, we have limits on how far a stock could run up before we trim the position. So really just from a portfolio management perspective, that's exactly what you saw. But I think since as we've sort of done our research on Tesla, and as you sort of look at the auto industry in general, the stock has had an amazing run. But really, if you think about what's happening now with the coronavirus, I mean, the company is becoming a clear leader, and every other traditional automaker is going to have such a hard time putting in that extra investment and actually developing competitive EVs in a time where their core business is really on fire. I mean, they're struggling just with their regular gas-powered cars, let alone this new innovative platform that they've sort of been trying to figure out for the past 5 years. So I think Tesla relative to the rest of the auto market is really sort of, that picture is emerging and becoming more clear.
All right, so you're long-term bullish, maintaining that point of view, that thesis going into today's report. Is there anything that would really concern you? Anything that they could say today that would really concern you?
I can't think of anything on the earnings call that would happen that would really concern us. But like long-term risks with Tesla are certainly, like we want Elon Musk to stay on as CEO. He's sort of a controversial guy. He's on Twitter. He's sort of gotten in the press for some of the comments that he's made. But we think he's really important to the company and sort of to stay at the helm, especially for them to reach that technological hurdle of solving for full autonomy. So certainly sort of from a management perspective, that's really crucial to us. And then, I think, longer term, we just sort of like to hear sort of about their plans. I think another risk that's often that we don't often factor into our models because it's not that predictable is sort of where regulations will fall. So Tesla's had a lot of, they have very good relationships so far. Texas is certainly really happy to have them come to the state. But yeah, sort of any sort of short-term pauses that might happen in Germany or sort of other factories that would be related to sort of political issues. But that's something, again, that we'd keep in mind for the short term. And sort of our long-term model is really focused on the economics of the technology, not necessarily subsidies or anything like that.
We're on with Tasha Keaney, analyst at ARK Invest. Tasha, obviously Tesla is no longer the only game in town for this trade, for this investment. Whether you want to go Nikola or any other of the recent SPACs we've gotten, can you just talk to us about just the massive run we've seen in this entire trade over the last month? It's been a really hot trade.
Yeah, I think with sort of these other newer players in the space, I think in terms of why the run happened, I'm not really sure, but I could venture to take a guess that investors are looking at Tesla's success. They're looking at the stock price appreciating, and they're sort of saying, oh, I missed out on this run. Where else can I get in on some sort of new innovative technology? Broadly, if we look at electric vehicles versus fuel cells, we've done the work on fuel cells, and basically we've never been able to make the economics work. If you look at for a semi, over the lifetime of the vehicle, like 700,000 miles, pretty much any way you cut it so far in our analysis, the EV looks cheaper than a fuel cell. Not to mention the infrastructure is just incredibly complicated. I mean, you can charge your car at home, for instance, in the passenger market, but you're not going to, fuel up a fuel cell vehicle at home with hydrogen. So that build out is actually much more expensive on sort of the public infrastructure basis as well. An EV station could cost, a good EV station like a supercharger could cost in the hundreds of thousands, where fuel cell stations pretty much always in millions. In fact, I think Nicola said it's like 16 million per station for theirs. So we haven't really been able to make that picture work so far. But in the electric vehicle space, we're really interested sort of across the board. PACCAR, sort of what the more traditional players doing. They just had their call yesterday. They talked a lot about battery electric, certainly more so than they have in the past. So we're sort of excited to see some of those more traditional players taking this seriously and sort of what their next moves are as well.
A couple questions here for you. One question combined. Full disclosure, I am long Tesla. Long term, probably will never sell it. But one thing to consider, I mean, I hear it's a tech company, right? And that's why you got to own it, because it's a computer on wheels. It's a tech company. It's the future. All I hear about is car sales and car deliveries. I don't hear anything about the tech aspect. And I go back and I think about the acquisition of Solar City, a company that was going bankrupt and was bailed out. I mean, if this is more than a car company, when are we going to see, some revenues from, solar panels or batteries, or aren't they building a tunnel somewhere? Have they attempted to build a couple tunnels? I mean, it's hard for me to own this purely as a car company. And I'm told that it's a technology company, a battery company, a solar company. When are we going to start seeing returns from those different projects?
Yeah, that's a great question. So, you mentioned the boring company, which we've actually done some work on too, separate from Tesla, the private venture, the tunnel boring company. But we think that's a really interesting technology because it's basically an innovative way to circumvent traffic, which we think is going to get much worse. But with Tesla broadly, I'm glad you asked that, because I think you're right that this advantage in software doesn't get a lot of play. But we are sort of seeing the early innings of it, right? So Tesla's like, I think when Tesla increased the prices of certain of its autopilot packages, traditional automakers looked at that and thought, wow, we've never been able to do that, sort of increase the price of something after the fact. Our customers wouldn't accept that. And it's because no other automaker has been able to do these over-the-air updates that actually affect performance of the car. And those updates are the reason that the resale values of Tesla hold up better than any other brand, certainly for a mass market vehicle, at least. I think for that sort of software as a service like model, that recurring revenue model, certainly, if they're successful in autonomous, that'll be huge. Our bull case price target that's published on that is 15,000 by 2024 per share for Tesla. If they're able to successfully launch that network, we think it'll be extremely profitable. But in the shorter term, again, back to that ride hail service, that could be a way to get those software as a service like margins, that high margin product, but not actually solve that technological hurdle, or at least it wouldn't necessarily require it in the near term. So that's why I think this could be such an interesting business line for Tesla if they were able to do this.
But is it if they're building these tunnels and for transportation, so aren't we going to need less cars? I mean, doesn't that kind of work against their business model?
So for the overall auto market, we think that actually car sales will, in the developed world, they might have already peaked. If you think that autonomous driving is going to happen, fully autonomous driving, because you're right, personal cars get used less than 5% of the day. An autonomous car could get a utilization even higher than today's taxis, say like 50%. So then you can solve the needs of, say, like 8 or 9 people with one vehicle versus 8. So we think that auto sales in the developing world will still increase, but at a slower rate than people expect today. And in the developed world, they actually already could have peaked. But within that sort of space, Tesla still has a lot of room to run. Electric vehicles are a very small percentage of auto sales today. We think that, that could go to over 30 million in the next 5 years, the EV market, because they're basically just getting cheaper on a sticker price basis. So yeah, we do think that the auto market's going to consolidate, and it's going to be players like Tesla that are still going to be around in the next 10 years. And that's not going to be true for every company necessarily.
All right, Tasha Keaney is an analyst at ARK Invest, also maybe the first trained mathematician we've ever had on our show. Tasha, thank you so much for the time today. I know it's early for you, but we appreciate it. Thanks a lot.
Thanks for having me.
All right.
I took math. I took math classes.
Yeah. Actually, and on that note, just a reminder, on tomorrow's show, we'll be joined by the CEO and the CFO of Electromechanica. Ticker is SOLO. So we're going to keep on this EV train at least tomorrow as well. I want to thank both our guests today, and Nate and Tasha. Thanks to all of you in our chats. If you liked that interview, please hit that like button on YouTube. We appreciate it very much. Please remember, all the information from our show is meant to be used as informational purposes, not for investing or trading advice. Everyone have a great rest of your Wednesday. Joel and I will be back in the afternoon at 3:40 p.m. Eastern time. Until then, stay safe and good luck.